even though the bond is at AAA, I will increase my credit cost, right? My credit spread over GSEC more. So what I'm trying to say is that corporate bonds have 2-3 factors which influence their prices. One, what is the rating of the company? Two, what is the underlying interest rate, which is 7% or whatever, the GSEC yield, risk-free rate, right? And third, the cost of risk, meaning for a given credit rating, how much is the market charging extra? That can change in a panic time, right? That can, in a normal time, the spreads over GSEC for a given rating will be very low. For example, historical lows. Right now, when there are no defaults in the markets are all fine, banking system NPAs are not there, economy is doing okay, the credit spreads are narrow, meaning market is not having too much worry about credit defaults, and therefore for a given rating the cost is low and hence the credit spread is low. So all of these factors influence the corporate bond. So corporate bonds are very good investments, especially in a time when economy is doing quite okay, the risk is low. Economy is doing quite bad, or potentially there's a panic situation coming through 2008 financial crisis. At that time, corporate bonds can really lose value, because even though there's no default which has happened, the price for the extra price that the market is, extra yield that the market charges will shoot up. The spread shoots up, and therefore corporate bonds have this additional risk that the spread also will change. So this is why interbank market, they're called non-SLR. That's okay, let's not get into it. So corporate bonds are basically these setup. They have these additional features like call, put, and credit spreads that you have to be aware. Any questions on corporate bonds? Okay. So where do you invest, right? Where do you invest in India? For example, if you are looking for bond investment, right? First of all, where do you invest? If you want to invest dated G-SECs, right? What are the two things? One, invest in primary market, meaning when the bond is being issued at that time to participate in that IPO, right? That's the first thing. Second, buy or sell in the secondary market, right? These are the 2 points that we need to cover, right? Now, investing in primary market, right? Primarily, I'm talking about GSEC. Let's talk about GSEC. GSECs, dated GSECs or state government bonds, these parts, generally for RBI Retail Direct, there is a website called RBI Retail Direct, right? RBI Retail Direct is basically a website. This one, I'll show you 1 second now. RBI Retail Direct. This is basically a web place where you have to register, and you can actually open an RBI Retail Direct account and directly buy. Whenever Government of India issues a bond, RBI they'll show you the bids you can put. 1 lakh, I think there's a minimum, I think about 10,000 or something. I need to know exactly where to figure it out. You can actually go and simply invest directly from here. This is on the primary market. So for example, tenor-wise indicative yields. Today, what are the yields, right? They'll show the yields here. But of course, when you actually go and check the actual issue, then the exact yield will be written. For example, a 10-year government, 9 to 10-year segment, it is around 681 today yield. You can expect around 6.81% yield. So if there is a fresh bond that gets issued today, it will be issued at a coupon of 6.81%. So you can invest 100 rupees at 6.81 or whatever that, 10,000 and beyond. Similarly, if there's a Tamil Nadu right now, Tamil Nadu yield is at 7.02 for 5 years, and Bihar 2034 10-year is at 7.13. Right? So all the typical bonds that you're going to invest, this is the place, RBI Retail Direct. Then there is something called negotiated dealer settlement, OM, open market. NDS-OM is basically a system for trading of government bonds. So NDS-OM, this is the trading of government bonds. This is primarily done in banks, primarily dealers, bond traders, they access the system for trading bonds. Now NDS-OM also has a retail segment, right? NDS-OM retail, basically. Through RBI Direct, you can actually go to NDS-OM retail. NDS-OM secondary market, you can directly go, right? You can see this is what it is, NDS-OM retail portal, right? So you can actually go from here itself, you can go to their place. There you can actually buy and sell existing bonds. So the people place, their lot sizes are there. You can place your order. Once the order gets accepted, you will get your bond. The bonds are allocated in your you can link to a bank account, and your orders are directly sent to your demat. There is the RBI has one, I forgot, SDL. Yeah. So there are accounts. RBI maintains an account. You can go through it later. I don't want to get into the mechanics of all this. So you can actually, this is very straightforward, very easy to do. So if you want to invest, you just have to log in and do it. Now the point is that this is for government bonds. What about corporate bonds? Corporate bonds generally you can directly go through, and there are a lot of brokers, right? All the equity brokers, they also provide access to the corporate bond market also. The most liquidity in corporate bond is actually in NSE. The NSE website, if you go, you'll actually see corporate bond market. So this is a corporate bond market. This is the traded on the NSE platform. Then OTC traded trades being negotiated here. Then OTC trades being reported here, right? There are a lot of avenues. It's not directly possible for you to access all this, right? You don't want to do all that. What you want to do is go to a broker, open an account where you can trade corporate bonds or buy corporate bonds. The problem with corporate bonds is this. The issue is, in a GSEC market, if you buy a Government of India bond, you can potentially, for example, interest rates fell tomorrow and you want to come out of it. You want to lock in your gains, right? You can potentially do that by going and selling your bond in the NDS-OM secondary market. Potentially, you can get a buyer, you can get a bid. But corporate bonds are very tricky.